Why gold prices are rising? A simple explanation: gold has always been one of the most valuable metals in the world. People have used it for thousands of years as jewelry, money, and a symbol of wealth and safety. In recent years, many people around the world have noticed something. The price of gold keeps going up. Why is that happening? What makes gold more expensive? Let's break it down in simple terms. 1. Gold is a safe haven. To understand why gold prices rise, we need to start with how people think about gold. When times are good, when economies are strong, people have jobs, and the stock market is growing, investors often buy shares, start businesses, or buy property. But when times are uncertain, when there's war, inflation, or a weak economy, people get scared. They start looking for something safe to protect their money. That's where gold comes in. Gold doesn't depend on any company or government. It doesn't lose its value easily, even when currencies fall. So, during uncertain times, investors move their money into gold. This higher demand makes gold prices rise. 2. Inflation and the value of money. Another big reason for the rise in gold prices is inflation. Inflation means prices of goods and services, like food, fuel, or rent, are increasing. When inflation rises, the value of money falls. In other words, the same amount of money buys fewer things than before. For example, if $100 could buy a gold ring last year, maybe now you need $120 to buy the same ring. The money lost value, but gold kept its worth. That's why, during high inflation, people prefer to buy gold. It acts like a shield against the falling value of money. And when many people start buying gold, its price goes up. 3. Global economic uncertainty. The world today is full of uncertainty. Events like wars, political conflicts, pandemics, and trade tensions make people nervous about the future. For example, the war in Ukraine increased oil prices and caused global instability. Rising tensions in the Middle East made investors fear energy price shocks. The global economy slowed down after the COVID-19 pandemic, and some countries faced recession. All these problems made people less confident in normal investments, like stocks or bonds. Instead, they turned to gold, the crisis metal. When global news is full of fear or instability, gold prices often rise because people trust gold more than paper money. 4. The role of central banks like the US Federal Reserve, the European Central Bank, or the People's Bank of China, also play a major role in gold prices. These banks control interest rates and manage their country's money supply. When interest rates are low, people don't earn much from saving money in banks, so they look for better investments, like gold. Also, many central banks themselves buy gold to keep as part of their national reserves. They do this to protect their country's wealth, especially when the US dollar weakens. In recent years, several countries, including China, India, Turkey, and Russia, have been buying more gold. Their large purchases have increased global demand and pushed prices higher. 5. The falling US dollar. Gold prices are usually measured in US dollars. This means when the dollar becomes weaker, gold becomes cheaper for people using other currencies, so they buy more. For example, if you live in Europe or Asia and the dollar's value drops, you can buy more gold for the same amount of local currency. More buyers mean higher demand, and that pushes gold prices up. So, whenever the US dollar weakens, due to inflation, high government debt, or lower interest rates, gold prices often move in the opposite direction and go up. 6. Limited supply of gold. Gold is rare. Unlike paper money, which can be printed, gold must be mined from the earth. Mining gold is expensive, time-consuming, and increasingly difficult. Most of the world's easily accessible gold has already been found. New gold mines are harder to locate and more expensive to operate. That means supply grows very slowly, even when demand increases. When something becomes harder to get but more people want it, prices naturally go up. That's another reason why gold keeps rising in value over time. 7. Rising demand from emerging markets. Countries like India and China are among the largest consumers of gold in the world. In both cultures, gold plays a major role in traditions, weddings, and savings. When their economies grow, Millions of people can afford to buy more jewelry or invest in gold for the first time. This growing demand adds to the upward pressure on prices. In India, for example, gold demand always increases during the wedding season and major festivals like Diwali. Similarly, in China, gold is often given as gifts or investments during the Lunar New Year. 8. Investors and technology. Gold is not only used in jewelry, it's also important for technology. Many electronic devices, such as smartphones, computers, and medical equipment, use tiny amounts of gold because it conducts electricity very well and doesn't rust. As technology advances and more electronic products are made, demand for gold in industries also increases, adding another factor to its rising price. Additionally, more investors now buy gold through digital platforms like gold-backed, exchange-traded funds. These funds allow people to invest in gold easily without holding physical bars or coins. This new, easier access has also raised global demand. 9. The psychological factor. Gold has a special place in human history. People have trusted it for thousands of years. Even before modern banking existed, it's seen as real wealth, something you can hold, not just a number on a screen. So when people fear economic trouble, inflation, or political chaos, they emotionally turn to gold. This psychological trust also helps drive up prices, even when the real economic reasons are complex. 10. What could happen next? No one can predict gold prices with complete accuracy. However, most experts agree that as long as the world faces inflation, political tension, and slow economic recovery, gold prices are likely to stay high or even increase further. If global peace improves, inflation falls, and economies grow strongly again, then gold prices could stabilize or even drop a little. But for now, the general trend continues upward. Gold prices rise for many reasons: fear, inflation, weak currency, limited supply, and growing demand. It's not just about the metal itself, but what it represents: safety, stability, and trust in a world full of change. Whenever people lose faith in paper money or the economy, they turn to gold as a safe place for their savings. And that simple human behavior, repeated again and again through history, keeps pushing gold prices higher. In short, the rising price of gold is a reflection of the world's worries and hopes. As long as people seek security in uncertain times, the shine of gold will continue to grow brighter.